How we made a few 100% trading options today? Well, we'll go through this. So to start off, and again, we post all of this in the Discord before we take it, so you can see exactly what we're looking at. It's in the description if you want to join. 9:30, just as market open. QQQ range to fill, and again we provided the exact range, which is 483.70 down to 481.23. Most of the time we expect this range to completely fill. However, a lot of times we'll just come into it slightly and then run out. So again, this is more of a magnet zone, so you expect price to trade towards it. Sometimes, or most of the time, you'll get a complete fill. Days like today, and we'll go through that, you didn't completely fill this range, but again, we still magneted towards it. So that's always going to be our main trade plan, is to come down and trade to at least the top of that range. So we talked about that. There was no range on SPY, so that again is going to mean that our main focus is on QQQs for the day. And on Spain, if you're on SPY, if you are looking at it, all we're using is fibs off the news to kind of look for pushes up there to get potential shorts into the fib range. And then once you're within this fib range, again, that's going to be your over-under level. So 572.22 is going to be your over-under level, meaning if we break below it, you retest it as a resistance. You want to look short down to the bottom of the fib, which would be 569.96. And as well, just to show you, again, everything lining up, we had a magnet zone down as we went through on the QQQs above. We also have all our downside gaps over on the ES and the NQs, which again should just bring the market down. All these magnets are bringing the market down. And then at 9:35, we posted starter size on the Qs, literally posting everything we're looking at. You can see we got an average at $48 a contract, and we're looking at the 482 puts. So go through that, and again, why are we trading all of this? Again, Qs is running up, we're opening up in this range here, we got short in this range here. Why? Because we had our magnet down on here, we had all the gaps on the futures are lining up, and again, if we pull up the futures chart, everything is lining up to tell us we're going to be short. You had all the gaps down here, all the gaps down here, everything telling us we are going to come down. And again, you had our fib on the QQQ news, but the main thing being this orange goldeny zone here, which is where you expect price to run down to. So all of that. And so again, we're getting puts here and we're locking in profits kind of as a starter lock in there. We're taking some here because it's a 50 line. And then the little bit that we had left running, we would have wanted to target down to here. But again, we didn't hit that. So again, we let that stop out break even on that final bit of size. Again, we're posting in here as well how these options are moving. So again, we've shown you we got in at the $48. These are the 482 puts. What happens? They're already up over 100%. Again, these continue to run. They hit target around, I think, 150 or so a contract. And then we looked into a new trade at 1020. So throwing in some profit. So again, whenever we get that main trade down to the range, which is what we already had, we then just look to risk a percentage of those profits to, again, turn it into a home run trade day or just a good day. Overall, you're never going to turn a day red on these final trades. So we're looking at the 480 puts. And again, reason for that is they're just cheaper contracts. We're going to be paying, again, around $40 to get into these. And that's just to kind of do that second run down to kind of fill up with the gaps down on the... looking at those final gaps on the NQ. So again, this was posted at 1020. That was our entry. What happened at 1020? So we'll go over to 1020 on the Qs. 1020 is here. This range here. What happens? We get a second run down. Now, why did we not hold? So we did take some profits in here. And again, you're going to be up 100% on the options on that run there. And that's because, again, firstly, you're not breaking these lows, but even if you were, it would have been quite a large divergence, quite a noticeable divergence, making that push down weaker. And again, we bounce off that 50 line, this middle line, 50 line. It tends to be quite a strong level on the range. We'll see you bounce off this time and time again. And that's why we'd like to take in profits as we come into this range. And again, we were already up over 100% on the position, so it just made sense to take in some profits. But again, you're never going to be wrong holding in. A lot of the times people will come and complete the range. Just today was not one of those days. And as well, just to line up with that 1020 trade as well, look where you're hitting. You're hitting the 50 line, so this middle orange line. That is the 50 line of news. So again, 50 lines to 50 lines are always strong. We talk about these fib to fibs, and that's when you're using these fib extensions. But within the retracement, the 50 lines are always going to be great. 50 to 50s tend to work really well. and you'll see kind of get pullback. That one's not as clean, but overall they do act quite strong time and time again. And then again, that was the main thing we were looking at the day. And then this is the final trade of the day where you may or may not have lost money on, depending on how you traded it. So here we are looking at these to go down to $20 a contract, so 20 cents a contract. QQQ again, we're basically just waiting for that range to fill. We're expecting that range to still fill, so if we can, that's what we're looking at. But we're looking at the 482 puts. Right now they were sitting at $30 or $33. Again, we wanted to buy these for 0.20, so $20. These did hit, but they did go up 100%. They went up to $41 a contract since we called the entry. However, again, obviously you can see we haven't come down to complete this range. So again, that's where these were worth $41. So they were up 100%. So again, it should have moved stops to at least break even. But obviously you can see we just ran straight back up, and we're just kind of holding this upside move, and really holding the top of the news, or the high of news fib. So overall, it looks like we're not going to complete. I mean, we do have 45 minutes if we can get a massive run down. And again, we are holding one contract left because again, we paid $20 for them, leaving $20 a risk, especially when we're kind of in this range here. Again, kind of just made sense because there was definitely a big opportunity that we had to still come down. Now, very unlikely, but again, they're only going to be worth $1 or $2 a contract. No point really taking them on. You never know. We could always just get some wiped down. Unlikely, but again, you never know. But again, that was the trading day. The main trades of the day were really clean, just kind of coming into the open short. And again, how do we know to kind of short the open and run down? It's always down to the risk to reward. You've got to look where you're opening, which is around 487. We're targeting at a minimum 483. So the risk to reward is going to make sense on the options because that is going to be over a 100% move. And again, if you're trading the options, the max you're losing is 100%. So as long as they provide 100% on the move, it makes sense to take the trade, which is exactly how we traded that. And then came down here, and why did we kind of reshort around that 10-20 move? Again, just because chances are you're going to continue down and try and fill that range. So those were the two high probability shorts. That's why we kind of ignored all this rubbish. And again, a bit later in the day, try to just get a cheap short down to here. Those always make sense late in the day if you haven't filled it, because the risk to reward, again, you're going to get like a 1 to 5 risk to reward most of the time. So again, even if it fails 4 times out of 5, you're still going to be all right. Again, today looks like one of the days where they're going to fail. And again, they were up 100%. So you can always take profits on those moves. That's just down to personal preference. So again, the way I like to maybe not take the profits on those the final day runners, but at least move those stops to break even so it doesn't turn the trade red. So depending how you traded today, we provided 3 trades in chat. 2 were guaranteed profits, and depending how you traded that last one, it's either a break-even trade, either a win, or either a loss, just depending where you take profits. Again, a lot of people are always going to take profits at 100%. If so, that was 3 trades called, 3 trades are won. So that was the main trading breakdown for today. Actually, the last thing I will just cover, again, we figure out these news all the time, and we also talk about these fib extensions that would have helped you get a nice trade down here. You can see the 161 did kind of provide the low today over on the SPY. And again, how do we trade on these? When do we buy these fibs? We don't just buy them blindly. You're getting divergences over on the indicators along with lower price into our fib, indicating a good chance for a bounce. Are we going to hold this whole run? No, but a fib to fib makes sense. So a 161 extension back to the 100 line is a trade that makes sense. So getting along here to here. Now, I was mainly focused on Qs at this time, so I didn't trade it myself, but it is something we do call time and time again. And if there was nothing on Qs, then our eyes would have been on SPY, and this is definitely something we would have been looking at. But again, that fib to fib always playing out pretty clean. And again, you would have seen that today. I didn't really get too much fib to fib action over on the Qs today. It was mainly just range and the actual retracements. The extensions weren't in play. Anyway, hope you enjoyed the breakdown. Hope to see you next one, and that's it. Peace.